What is up everybody, Gifford here, and today we're going to talk about a question I see a lot of people asking, and that is, why did the stock price go down? And I want to answer this question because some people do not have a clue at all. However, it's actually pretty easy to find out why your stock went down, and we're going to go through that, do a little bit of investigation. I'm going to show you the steps that I do it to find out what happened to my stocks, and then the next part is understanding, right, how do I figure out if the stock is going to recover or do I sell out of it? So I own MPW stock, and it's currently down 70% since all-time highs, or around about there, and I'll show you the stock chart in a minute. But anyway, it's as simple as going to Google and typing down why is MPW stock down by 70%, or it could be 3%, and articles are just going to come up, right? So the first one here is, I've already clicked it, so medical property stock is down by 3% in 3 months. So really just start clicking in these, have a bit of a read, and you're going to get a fair idea of exactly what's going on with the company. So here's a site here called Market Watch, and typing in MPWs in the search, which is up the top here, you can see down here that it has some articles exactly of what's going on in the company. So you're going to find out straight away why analysts or why the news reporters think it's going down, or what are the reasons. And you've also got all this key information that they provide here, totally free. Just look it up in Google, it's all here for you. So moving over to Yahoo Finance, I'm just going to show you a couple of things and the reason why our stock does go down. So you can see here over the 5-year term, it's down by over 78%, and we can see at around about 2022 that the stock price was around about getting close to $25, and right now it's at $4. So scrolling down, just like the news as well, you'll come up to here and you'll have research analysis. So every quarter in the year you have these earnings calls, and if you watch my channel I talk about those earning calls, and inside those earning calls is all about the revenue and the EPS, and basically this is how you track a company, how its revenue is doing, and also what the earnings per share is and what the company is doing. And here it's just got a quick analyst recommendations of what they think they should do with the stock. So here it's telling me, hey, a lot of it should be a hold, or you can sell some of it. So these analysts are paid to predict what MPW is looking like, and this is why the stock is to go down, because they've actually missed a few of their targets, their financial targets. And remember, analysts look out only 12 months, only to the short term, and they're seeing issues in the company. So we go over to Stock Analysis, the website, and I'm just going to show you a few things here. I find this website very helpful. So again, remembering at 2002 the price was up near $23, and it's obviously crashed down. So this has crashed for a reason. So if we look at the financials of the company, click annual, so it gives us the annual data, and going straight to total revenue, we can see here that the revenue has pretty much dived down. So now they're only getting 1/3 of the revenue that they were getting in 2022, and straight there it tells you that something has happened with the company. What actually happened with MPW and why there was a stock price crash is because they are a REIT, so real estate investment trust, and one of their sort of tenants, a big tenant in the hospital, wasn't paying any of the rent. Therefore, they weren't able to generate money from that. Now, the reason why the stock price has gotten even worse, and you can see here that the revenue got even worse, is because it wasn't just one tenant. It was actually multiple tenants. And the fault on my part is that I bought them thinking this is only going to be short term. It's only one tenant. I didn't actually realize that there was a lot of issues going on, and I think at least 2 tenants have gone bankrupt. And then what was worse is that they weren't paying rent for a really long time, and this is where the revenue has absolutely just gotten smashed. So you can see here that they've lost 2/3 of their revenue, and the stock price was at $23, but the stock has gone actually lower than sort of 1/3 the original one, right? The original price from there. So the stock is fairly down because of these reasons. So showing you a metric here called operating income. Let's just read what that says. Operating income is the amount of profit a company has after paying all the expenses related to its core operations. So if we look at this here, this tells us how the performance of the company, and you can see that it's actually gone smashed. So the operating income in 2022 was just above, so that says 1,000 million, which is $1 billion. So the operating income in 2022 was $1 billion, but now it's only 81 million right now. So that's a trailing 12 months. So that shows you how much money they've actually lost because of these tenants not paying. And this is why the stock has absolutely been devastated, because they're not actually generating a lot of operating income, and it's just collapsed. You can see that. So if you were to, so that's what, 1/10. So basically out of $23, if you did 1/10 of that, the stock price probably around about $2, right? So I guess it's pretty good that it is at $4.30. So this brings me to the next question then. Gifford, should you be selling your shares? Because remember, I have 1,300 shares in this at the moment. So first thing to answer that is this company going to go bankrupt? Will they go bankrupt? And all you have to do is go to the balance sheet, go down to the total assets, and you can see here they've got 15 billion in total assets. Okay, let's have a look at their liabilities, and straight up they've got what, 9.7. So we can see here there's a $5 billion difference. So yeah, they're not going to go bankrupt right now. They've got money. As long as they continue to have a positive operating income, then they can still pay everyone, and then they can actually survive as a business. Remember, a business can actually still survive even if they don't make money or they don't make a profit for a long time. They can get money elsewhere or from their shareholders by raising capital, that sort of thing. So this stock here, it is held as value because it's not going to go bankrupt, or it's going to be around for a little bit longer. And for me, I wish it's going to recover back to them days, at least over $10, so I could double my money if I'm still in the stock. Okay, so that straight away tells us the company is not going to go bankrupt, not in financial hardship. So the next thing I want to talk about is this company pays a dividend. That's one of the reasons why I actually invested in them. So if it pays a dividend, therefore it's going to be taking more money from the company to pay it out. Okay, and yes, let's have a look at where that dividend is and how much that dividend payment is. So in the financials under cash flow, we can go down here and there should be something about, there we go, common dividends paid, and we can see that the dividends have been going down. That's because the dividend yield is going down, and I'm going to show you that soon. But this is really good now that the dividend is actually decreased because they're paying less dividends out, but therefore the company is holding more money, therefore they're more likely to survive. But as we saw, they're not going to go bankrupt there, but it's good that the company is holding money, so then they can actually try to get out of this situation. So with like all stocks, there's key metrics to it. Now for REITs, the key metric is FFO, which is funds from operations. Give it a bit of a read, research it a bit, and then you'll understand that for this particular stock that you use funds from operations, it tells you a lot. We don't really use the PE ratio, we do for other stocks, but for REITs, you use funds for operations. So with key metrics, they actually matter for the stock that you own. So because I know it's a REIT, just for example, imagine two cars were having a drag, a quarter-mile drag. You have one as a Tesla, which is this family vehicle, which is a Model X, and it looks kind of bulky, and then you verse it with something like a Lamborghini. Off the face value, you think, well, the Lamborghini is absolutely going to destroy this big family SUV. But then one of the key things to look for in this drag is not really about how big the vehicle is, but if you look over here, how quickly it's going to do the quarter mile. And you can see here, this Tesla Model X Plaid can do the quarter mile in less than 10 seconds. Now, if it was just a normal Lamborghini, not like a souped up Lamborghini, but Lamborghinis are very expensive anyway, right? About $500,000, maybe cheaper secondhand. That this car is actually going to destroy the Lamborghini, but from the face value, you would think the Tesla would lose because it's just a family SUV, but because it's an electric vehicle, it's very fast. So those are the kind of key metrics that you want to look for in the companies that you have, because they will tell you a lot about how this will end, or in this particular case, how this drag race will end. So with MPW, what I'm hoping for is that they do increase that FFO over time as they recover, do something about their properties so that their tenants can start paying, or sell them off, or sell that debt off to other operators, so then they don't have to carry that in the company itself, and then be able to grow their revenue and income back up. So just talking about the dividend income, remember I was saying that it has actually decreased, and they've needed to do this to actually survive the company. So you can see here in 2019, 2020, the dividend income was 0.27 per share. Yeah, it looks like quarterly, so you'll times that by 4. So right now though, the dividend is only 8 cents, and that's okay with me, because I want the company to survive so that later on the company can then get back to making revenue, making money, increasing that operating income, and get back to the pre-revenue when all the bad stuff happened, after they get rid of their tenants or their properties. So this brings us to the last thing. Well, how do we actually know if the stock is going to recover, if the stock chart is ever going to go up? Well, the way to do that is to actually understand the company itself. And with that, what you got to do is you go into the company's website, then you got to go to investor relations. Inside the investor relations, it will have those Q3 2024 figures, or whatever the quarter is, and you've got to read them. Inside them, it will show you the annual report, and it will also show you the press releases and whatnot. But then the other thing you got to do is you got to listen to the earnings call. So this here will have financial metrics of the company, how it's going, how they're addressing the issues that is happening with the company, and then how is management addressing the issues. Now, if you don't know much about management and how a company works, then maybe investing in individual companies is not for you if you don't want to learn all about this. If you do, then feel free to learn as much as you can if you really want to invest in individual companies. Otherwise, just buy a broad index total stock market fund and don't have to worry about this, and your stocks will go up over time. You might not get the big returns, but at least you don't have to deal with this kind of stuff here. So it's only people that are interested about individual stocks, because they can make more money than the standard stock market yearly gains. But coming back, once you read all these reports, then you make up your mind of whether or not management is actually going to be able to recover. Are they doing the right thing? Are they actually telling the truth? Are they lying? Do you think they're going to be able to pull this off? So the big thing with that is this thing here called call access. Now, what it is it's a call of management, the CEOs, them talking about the company, how they're going to get out of it, and analysts asking them questions of how they're going to turn this thing around And so at the time they'll release this, and then so you've got to figure out when the earnings is actually are, and then go into the website and then log in so you can listen to it. However, there is easier ways. So after they do release it, what you can do is just jump on YouTube, put it in, and then someone will upload a video about it. So this particular earnings call was 30 minutes. I've actually listened to this. I did remember that they're going to try to get to revenue of about $1 billion sort of for the coming year. So whether that happens or not, I have no idea, but this is them telling you what the plan is going to be in the future and what actions that they're taking. What the outcome is, I have no idea. Just like other people investing in it, they have no idea. The analysts have opinions. I have my own opinions, but I guess we won't know until the year is over and we actually see where it is if you want to still be invested in the company. Otherwise, obviously you're going to sell your shares at a loss and move on to another company or just start investing in index funds. So just to summarize the video, that's what you should be doing if your stock price goes down and you don't understand why. You need to do a bit of research and really look into the companies that you invest in. It is a hobby, but there's money involved, so you have to take it a little bit more seriously than you would with just a casual hobby. Otherwise, just buy a broad market index fund and don't have to worry about this. There's a ticker here as recommended, which is VT, Total World Vanguard Fund. Anyways, thank you for watching this video. If you've got any questions on any of the stuff I've said, feel free to comment down below. Also, I'm over on Instagram, so feel free, as I do weekly posts about what I'm doing in a stock market and just normal market commentary. So go over there, follow me if you can for that. The trading platform I use is Interactive Brokers, Hatch Invest, Stake, and Sharesies for individual companies, and I use Invest Now for index funds. If you want to start investing, you can use any of my referral codes down below to start your own investing journey if you are from New Zealand. Like and subscribe to the video. Thank you very much for watching. If you're interested in other stuff that I post here, subscribe. Personal finance, property investing, and obviously my stock market journey. I started investing in my Sharesies account in the 2020 stock market crash, and I've been growing it over time. So click this end video here if you want to see one of my portfolios. This one is my dividend Sharesies portfolio. In total, I've invested over $120,000 into the stock market. Those are New Zealand dollars. Otherwise, thank you for watching, and I will catch you in the next video. Goodbye.